Okay, Brenda?
Yes.
Cool. All right. I guess Bill, well, I don't have to say it. Bill's started recording, so that's good. He knows his job really well. So we're going to go payroll, administration, and we were talking last time about payroll setup. We really never finished some of these switches, and they're important. So we did this, and I think we were kind of stuck in this area here. And I looked at this big screen, and I went, oh my God, and we had like 5 minutes left. So I wanted to just make sure I stopped and just kind of walked you through what I know here, and hopefully I'll know mostly everything. We'll find out. Show blocked employees on the list, checked. So that just simply means actually that when you open up the employee list, it will already, in this case, show you the employees that have been blocked. If you unclick that, then the system will bring up the employees where the blocked employees are missing from the list. So if you start to search for a blocked employee, let's say an employee that terminated 2 years ago, you won't find them unless you break your filter, kind of release that filter. But the reason we do that is because a lot of districts over time have, because of turnover and different reasons, they have more records blocked than not blocked. And it's very difficult for the payroll operator to have to wade through so many records that are just what I call dead wood, if you will. So I like that setting. What I mean by that, I like that setting unclicked. So clicked, I probably wouldn't recommend it, but that's what it is, at least on this example. Do you want to just default the employee list by name or by ID? Generally speaking, if they have a smart ID where the name is kind of in the first few letters of the ID, then they go ahead and typically not click this. And if they do have just the next number up where the system is just assigning a number kind of in a series and they're all just random numbers, then they generally click that list, click that checkbox. On the employee job screen, so when you're on the employee card and you actually click to show the jobs, you have two choices. One choice is to hide all the blocked jobs. The other choice is to hide jobs from the previous years. So in that example, if you did the previous year's jobs, if the jobs are in the previous year, whether they're blocked or not blocked, they just disappear. The other side of that is that if you are doing that and an old job, well, if we do the hide all blocked jobs and it's like a current job for this year, but it's been blocked, it doesn't show. So some people kind of go back and forth, but you just have to pick what your preference is. This is a global setting, and so you just got to pick what you want to pick. I kind of like the first option. That's usually we're trying to give you some prejudice by putting the first option that we think is what you think you might actually want. Or by better with. The sort, I just don't remember this one, but I guess what this does is, do you want to sort the job? So let's say the person, and this really comes into when you actually show the blocked jobs. Do you want to see all of their teacher jobs together and then all their supplemental jobs together and all their coaching jobs together? Or do you want to sort of see it by date? Here's 2011, here's 2012, here's 2013. That's really what the job number ascending and descending and start date ascending, descending are really about. So typically the job start date ascending is what people want, which basically gives into chronological kind of components on the screen. So that's kind of what that's for. So you have a choice there. It's up to you. Employee job allocation number source. This is important as well. So when we were in the employee job card, we were setting up a new employee job, I told you that there's a button there that says create new allocation. When you click that button, the system comes to this default here. I'll show you the choices. To determine whether you prefer to have the allocation number be a combination of the employee number and the payroll job number. And I need to tell you that that combination can't exceed 20 characters. So your employee number, which potentially can be 20 characters on its own, God forbid you did that, and your payroll job number, which can be up to 10 characters, have to concatenate with a hyphen and still live within the 20-character limit. If you don't, the system, I can't remember what it does. It either truncates it or errors. I think it actually just truncates it. And then you get into other bigger problems because then maybe the system is getting mixed up and thinks it's a duplicate record because they're in two jobs that sound very much the same except for the last couple letters of the job are different. So I guess what I'm saying is if you have short job numbers, you have short employee numbers, it's a great construct because then you could actually see the allocations later on and kind of know who it belongs to. Otherwise, you can say forget it and just go ahead and just pull it from the payroll setup. When it says payroll setup, that simply means, again, in that number series, it's pulling from this number series here. Okay? So that's that. Okay, this next section, which is really, I guess, I'd say all four of these boxes are all connected to the same concept, which is employee-vendor integration. So we basically have the ability to create or synchronize, if you will, the address on the employee's card, which again, remember, can get updated with the self-service system with the vendor. And the reason we would do that is that often the employee also is traveling for the district and will submit a reimbursement for travel expenses, other kinds of expenses, and so forth. And we usually do that through AP. But wouldn't it be nice if the address changes that you're making at the payroll level are flowing to the vendor? Well, there's a field on the employee card we showed earlier which shows you the vendor number. We now have the ability to create the vendor from the first place right from the employee card. So as you're onboarding a new employee, if you know this one needs to have a vendor set up, you can just press a button, it'll create the vendor for you and store it in the employee's card. What this basically is in terms of this option is to turn the integration on. Okay, without that on, nothing happens. That's the first thing to know. Here, it's not being clicked, so I'm not sure what it does. Quite honestly, I'm not sure what blank does, so I have to argue that. But I guess if you pick upper and lower case or all upper, some people kind of are really into all uppercase on their vendors, and I don't know why. So if you are that kind of company and you want to be upper and lowercase in payroll but uppercase in AP, that's what that option was for. I suspect that the blank option is similar to the upper and lower in the sense it just does whatever's there. So I guess that acts the same way. I just don't know why it wasn't set as the zero option instead of the one option, but that's another story. Yeah, all right. Okay, employee vendor address sync, actual address or remit to address. I don't know really why that's even the case. It should be going to the actual address. Every vendor card has an actual address and then another alternative remit to address. You know how vendors will have, here's the address where the vendor is, but then please send the checks to P.O. Box whatever. So that's kind of where the remit to address is used for. So I would argue that you'd want to send it to the actual address. I'm not sure why they would have two addresses as an employee. And then use the remit to address flag. If you check that, then you would probably want to check this and check that. But again, not sure why you would be doing that. So I think there. Now it's going to be happy. Okay. So those four things go together. I probably would be in this kind of mode, probably like that. It's probably how I would be. That's just my own opinion. Anyway, a retro period basis. This is when we do the retro worksheet, which we have not trained you on. And hopefully we can talk about that today. If not, maybe that'll be in our session 27. I don't know. It'll be one of our future sessions. But we have a whole retro amount capability. Retro amounts typically in a union world happens because they're bargaining right during the beginning of the school year, and they don't finish their bargaining until after 1 or 2 or 3 paychecks have been processed. They come to an agreement. We change the pay schedules. We update the jobs, all that good stuff, and we have to retro them an amount and pay them an amount, as if they were paying them on that amount from the very beginning. So the retro period basis, I guess, is using the posting date or the pay period end date. So I guess there's a time period where when we run the actual calculation to figure out the retro amount, where we're saying what is the as of date, what is the date that this bargaining became in effect, and then do we go back and look at the history of what's been paid this person for this job based on the posting date or the period end date. And I would think it would be the posting date, which would be the check date. Posting date in our vernacular is the same thing as a check date from a ledger perspective. So I'm sure that's what's put in there because we probably had 2 districts that came about that with a little bit different choice. We use payroll activity in some states. It's used in Texas. It has to be flagged. You have to flag things and so forth, maybe in North Carolina. So I guess this was there to be able to put in when it's retro pay. This is not being used here for retro pay, so you're not going to find an option called retro pay. So I can't remember what state that was, but that's probably not that relevant. If you find a district, and again, I don't know in Ohio whether this is acceptable legally, but we talked about it before, where you can put the payroll calc in a contract payout mode, and where the system basically is saying, okay, we've paid them over, let's say the whole year, let's say you're semi-monthly, so we pay 24 times. We are getting to the June pay run, and we're now doing a special run where we're going to accelerate the rest of their contract and pay it out in a lump sum. So when we do that, when we put the calculation in a contract payout mode, the number of cycles contract payout is used to determine how much we actually need to multiply really fixed deductions, flat amount deductions, not percentage-based things like Social Security and Medicare and retirement, but rather like medical and things like that. What do we multiply them by? So if I know that, they're getting their check now, and that really represents, if you will, what would have been in 4 checks, going forward through the summer, then you would put a 4 there. And you'd have to do some other configurations on some of the payroll controls, which is part of our later conversations. But anyway, so that would be, in essence, the way to get that to work. So there's certain ways that you multiply by that for that amount right there. Contract limit tolerance, we have on the payroll test report, as well as I think it's just the payroll test report. The system can produce warning messages if, in fact, you are getting close to the contract limit. So I guess in this case, within $5, it'll warn you. Probably be more important to say more like $50 or something. It's just a warning, basically. In terms of the actual payout, what it really does is it just pays out the balance. So once you're in contract payout mode, if the contract limit was $60,000 and it's paid $45,000, it says contract balance is $15,000. That's the amount. So that's why this number of cycles payout is really more about the deductions. It's not about the earnings because we know how much to pay out there. It's just simply contract balance less paid to date, less docked to date. The confirmed pay control changes. That's interesting. Yeah, let me just show you what that does. So I have it clicked right now, and I believe this is what it does, and we're going to find out. So if I go to employee's card, okay, hopefully that one will come up one of these days. Oh, gosh. Were you in our Tuesday class, Brenda?
Yes, I was.
Remember I was doing user access rules?
Yes.
Oh, they're in effect. Anyway, that's what happens. If you do user access rules, it becomes very interesting all of a sudden. It's like, where'd my employees go?
Yeah.
Because no employees had that dimension value on there. And so all of a sudden they're all going to show up. Oh, look, they all showed up again. So in this screen, pay controls, actually the way I'll show it is different. Let's just say I go to other off, and I want to deactivate this TSA for whatever reason. When I go to the related controls and I click this checkbox, you see this message coming up?
Mm-hmm.
And I'm going to click it again, and it's coming up again. Very good. So now we're going to close all that up, go back to payroll, administrative, setup, and we're going to click it off. And we're going to go back to payroll, back to other auth, back to this guy here, back to related controls, and we're going to click them off. See what happened?
Yeah.
Yeah. So some people the reason that they wanted that feature, I don't know if I'd call it a feature, it's really a safety feature, is that they were accidentally just on that screen looking at something, and I guess a couple people had clicked it not even realizing it. So that's where that's the genesis of why we added that feature, because it is kind of important. If you shut off accidentally the active flag on or off, when you didn't mean to, it causes problems. A, if it's off, then it means the deduction doesn't occur. If it's on and you haven't done the setup, well, then that causes other problems. So, no matter what, it's probably not a good thing unless you knew what the heck you were doing. So in terms of leave option 1 label, leave option 2 label, there's an ability, I believe it's on the paycheck, to when you get to the payroll control design, when you set up a leave control, you say whether it's sick, vacation, personal. We kind of hardwire it so that we know how to show it on the paycheck. This leave option 1 and 2, you can pick on the payroll control and say this is option 1, this is option 2, and then here's where you define it, so that we then can show that way. So instead of having sick and personal vacation as the only 3 choices for a paycheck, we really have 2 others that can be user definable. That's kind of how that works. It's mainly just for paycheck reporting, which is, important, but becoming less important, I would argue, as we're doing mainly ERC, self-service, and people are getting their checks online, and they're going to their leave balance, which is a much more rich environment. This is becoming less of an issue, but it's more of a carryover, I think, of the day where we were doing the self-service system. Okay, this next field is just sitting in the middle of all these other fields, and gosh darn it, it's extremely important. So it's just kind of funny. So adjust pay rate by FTE, and I think I probably talked about it in our earlier training on the job card. So if you remember, we're talking about a salaried employee now. We're only talking about a salaried employee. When you have a grade and step, and again, I know you guys weren't using grades and step, but either way, it generates a pay rate, $70,000 for a master's with 20 credits, step 5, $70,000. I'm just making that number up. So when the FTE, when this is checked, and you on that same card put a 0.8, then the system is using that 0.8 to determine the pay period amount that we're going to actually pay them and the contract limit. So in other words, 70,000 times 0.8, 56,000 will become their contract limit. 56,000 divided by, let's say, 24 or 20 or 21, whatever the cycles need to be, is where it's going to compute the pay period amount. So I guess what we're trying to say there is that the FTE on the job card is real, and it's having a real effect on their compensation. If you unclick that, it basically becomes FYI information and is not applicable, and then it's your job to fix one or the other and make it all right. You're kind of now responsible. The computer's not helping you any longer. So most of our districts over time have decided to go with the computer actually doing the work for them, but some still don't. So it's kind of up to you. But you have his click, so I'm assuming that in Ohio we've been using this feature. Some people don't realize the importance of this, and they may unclick this accidentally, and they'll be very unhappy. It doesn't do anything immediately. It just does a problem the next time you go to a job card. Well, again, it only affects it if your FTE is either a non-value, zero. It's this thing only affects if the FTE is equal to a value not equal to 0 or a 1. So that's when this comes into play, and this is checked. That's when it comes into play. So if it's a 0, we interpret that as a 1. If it's 0.1, 0.2, all that, and you can't put a value greater than a 1 in. So it only takes a value minimum 0, maximum of 1. So that's how that works. These next 2 fields, I don't know even if I could even talk about it. I don't know if it's that important. We have the need in Pennsylvania when they issue a sabbatical. The teacher's been there for 7 years. They go on, let's say, a month sabbatical. And what they end up doing is that they pay them half of their salary, but they actually contribute into their pension plan at twice the rate. In other words, that's what that multiplier is used for. So I don't know if you even have that in Ohio. If you do, you have to have the question would be, do you, when they take sabbatical, have any specialized rules that cause you to put into the pension system a different basis than what they're actually getting paid? Sometimes not getting paid, sometimes getting paid a whole salary, sometimes a half salary, whatever. In Pennsylvania, it's just universally state regulated. You pay them half, and you have to contribute at full rate to their PSER system, which is their retirement system. That's where it came from. So, and it has to be reported, by the way. You have to know it's sabbatical. So just lovely stuff. SUI payroll control here. So we generally use that in various processes, and we need to know what your payroll control is for SUI, in this case OH SUI, so that's important. Day of month for employee count is probably used for unemployment reporting. What day of the month do they need to be working for their counted as an employee? That's probably, again, a simple Ohio unemployment type thing. GTL rate is what is the rate code, so that when we do the GTL calculation, what rate code do we use, and it gets it from there. What is the earnings limit that the government has said, you have to have, earnings limit is not really the right term. It should be GTL coverage, insurance coverage. That's what it really means, and 50,000 is the right number. And staff ID numbers, I don't know what that is. Oh, wow. I don't know what staff IDs are, so that's a number series, so therefore it's in the wrong place. It should be on the numbering tab. I don't know, Bill. Do you think we need to worry about that right now, or should we skip that? That's a mistake.
We can probably skip it for now.
Yeah, it's basically, technically speaking, anytime you have a number series field, you put it on the numbering fast tab. So you just may want to look at what work order that was in, just to see, anyway, it doesn't matter right now, but it's just that's not a technical flaw, that's just a cosmetic flaw.
Right.
It's not like it's a killer, it's just like, oh my God, Okay, EIT, this is when we're doing the local tax. This is, I guess, the school district tax in Ohio. So we do use this. We need to know whether you want to use the automated method. The automated method causes the system to record a tax auth info record when they change to a different school district, and they can pick the school district on their self-service system, and then it will write automatically when it gets processed a new EIT record for them. And at that point, it should pick the new rate, although I'm not sure if that's the case. So we have some other settings there. Not sure how that's all working. When I started looking at some people were asking me questions about EIT in Ohio and the W-2. Brenda, do you know anything about whether that all got resolved for producing on box 20 the code or anything? Does my question even make any sense to you?
Mm-hmm.
Do you know whatever happened? Did that ever get resolved?
I don't know.
I don't know either. So I just, in a perfect world, I think you'd put like the 4-digit school district, 20. I just don't know. So some of the stuff relates to that. I'm not going to get any more explanation because that's kind of a separate sort of rabbit hole. These defaults are very important. These defaults are used when we go ahead and we create a new employee. Highly important that you fill them in. Semi is the default pay cycle. If there is one, hopefully there is one. Employer, absolutely fill in. This default reporting authority code, I've never figured out why this field needs to be physically on the payroll tab on the employee card, but it has to be there, otherwise we get errors. We know we need to put the state tax value in, but we really don't know why, and we never really figured that out. So anyway, point is we know it needs to be there because you get errors if you don't have it there. So the good news, if let it come in, they could hide that field on the employee card and never have to worry about it, quite honestly. Default fund, people have tendency to try to change the fund on the employee card. We, I believe, either made it additional or even removed the field from the employee card altogether. We found that the system was actually giving people incorrect accounting entries because they were changing this field, not realizing what it was used for. The system actually uses it for what we call the control fund. It's not really where it puts the debits, it's really where it puts the credits. And it was causing all kinds of different accounting entries that didn't make any sense. So to make it clear, you got to put a value there. It's the value that you would want to have connected to the default bank account, the payroll bank account. So the payroll bank account is going to be in fund 001. You want to put 001 there, and never will you worry about it again. Where the system is going to get the fund from an earnings perspective and from an expense perspective is from the allocation. And so that's the thing to understand, and it's not driven by this. So anyway, so that's just what you need to know is that the default fund is the fund that's associated with the payroll checking account. The default employee type kicks off that valid, invalid functionality we showed in the statistics box. And we had that problem, remember, and we had to kind of go find out why it was invalid, and we fixed it and revalidated that employee. So that's a part. When we get later on, we're going to get to some setups, and I'm going to show you where you kind of indicate what fields you're going to require to be filled in. We've added a couple. So anyway, that's important if you want to have that validation system, meaning do you want the system to tell you that you've entered enough basic information for this employee to be ready for payroll? And most people feel like, yeah, why not? And for the most part, I think it works well. We've had some issues with it over time, but I think we resolved all the issues. Default control code, that's real important. That's where all the controls, all the payroll controls are connected to the payroll control groups. You want to have one called master, and that brings all the controls in, and we'll talk more about that when we look at the control groups. But anyway, that's that. Default union code, again, it's coming in as none. I'm not sure why the default needed to be there, but it is, and that's fine. But you could have another default. I love this one. This one's not checked here. I personally would check it, but again, I would consult your client first. So default blocked I love because when you're processing a calculate, you're in the payroll journal and you hit that calculate button, it's calculating all employees that are not blocked. If you bring a new employee and it's not going to start for another month and you start to onboard them and they are not blocked because they come in not blocked, that's how they default in based on this default, they're already kind of now already in the scope of that process. They're not ready to be paid. You may not have put their social number in. You may not have done a bunch of stuff, so they're kind of invalid. What happens is you get an error during the payroll calc. Because they were not blocked and because they weren't fully set up to be able to potentially, and I put that in quotes, potentially be paid, the system still considers that an error and needs to be resolved before you can process further. So that's kind of a pain. So I've kind of come up in my mind with a better way to do this, which is why not default them as blocked? Why not see the blocked as simply saying ready for payroll? You know, people want to see blocked kind of is on a termination side, but why not on an onboarding side see it the same way? So you default them blocked, and until payroll, you know, from HR filing to payroll gets all the information filing to fully get the employee fully ready, then they would, in their procedures, would be unblocking them and finally putting them within the potential scope of a payroll calc. So that's the reason why we put this value called default blocked. Just default them blocked. The downside, I would argue, is that setting earlier where I told you go ahead and hide, you know, show blocked employees on list, and it's checked. I probably then in that case probably would check it because now you're basically having the new hires also be blocked. And to make new hires drop off the screen, well, that's kind of a pain. So I don't know if you see the nuance there, but that's a little bit of sort of thinking how you want to process. This system gives you so many different ways to do things. You can see that sometimes people go, oh, just tell me what to do. Anyway, we're not that simple, unfortunately. Encumbrances. So if you do encumbrances, we talked about encumbrances last time, and the ability to encumber so you have better real-time view of what you have available even in the payroll type of account strings. If you're doing the encumbrance, the system has to know how to balance it. So at the time that you're producing the encumbrance entries, we're hitting a ton of debits. You know, we're encumbering, but by fund it has to balance somewhere. And so where does that balance to? And then we can use that basically. So that's what this is for. Although I'm not sure about the fund, because you would think I wouldn't need to know the fund because it would do it by fund. Yeah, so that's interesting. If you start using encumbrances and it's creating a lot of inter-fund entries, let me know, because I can just remove this field, and then we can just put an offset per fund. And therefore, you'll never get any inter-fund entries because there's no crossing of funds. Time entry, we have some setups we added. Timesheet number. Well, and there is a series right there, so I'm actually violating my own thing because I'm the one who stuck that there. But it kind of also relates to the fact that it's timesheet. When does your work week begin? This says Sunday. When do we normally come to work? You know, what's our start time? Minimum hour increments. We're allowing people to enter time at what level? Per minute, quarter hour, half hour. Minimum day increment, so if you're doing, let's say, day type leave, you can go down to what level? What's the standard hours per day? 8 hours, whatever. And this one actually is being used more and more. We actually just used it just recently in the daily rate calculation. So to figure out what their daily rate is, we have to divide. And this is not, the daily rate is, I guess, it's for an hourly person. So for an hourly employee, when we kind of present onto the screen what we think the daily rate's going to be, we normally take their rate, which is $10 an hour, and multiply it by a field that's on the employee job card called hours per day. However, let's just say it was blank. Well, then the system falls back to this and uses this. So this is the standard hours that this district is open for generally an hourly employee per day. So that's kind of like the fallback, basically. This guy here is used as a way to allow people to muck with their own time back a certain time. So in other words, we're saying you can't mess with your own time if it's beyond a certain time back in time. So let's say you said 30 days or 60 days. You can't go back and muck with anything. And what we're really dealing with is that you can put a timesheet in, get it approved, but you can go back to a timesheet and put a new line in and then hit submit. Well, after a certain point, you may not want to allow people to do that any longer. So how far back before they can't do that type of thing any longer? So they can't muck with something they've already been approved and processed. You can't muck with that. But you could add a new record and say, well, I worked an extra 3 hours doing this. It's like, well, I don't want you to be able to do it anymore. So you can type in 30D or 2M. Okay, so we use shortcuts, basically D for day, M for month. This would be 4 years. I think go back 4 years, and so forth. So I'll say, 60D, something like that. If you put something invalid, if I say 60E, it'll come back and tell you that it's not acceptable. It's not a proper date calculation, and gives you some shortcuts there. And you go online, help, and it'll give you lots of information on how to do these things. Okay, so that's that. Next tab is regulatory reporting, which not sure what that's for, and so I'm not going to worry about it. I have no idea what any of that's for. I'm not sure we're using any of that, quite honestly. Okay, retirement cutoff setup. I don't know if any of this is being used in Ohio, so I would argue probably not. This was a design, and we do use this in other places, certainly in Pennsylvania, where we learn kind of based on the date entered, based on when they worked, what year is that considered. So it's basically like for 2015, our cutoff date, this is going to be a calendar, I think, yeah, it'd be 06, well, it might be 06, 14, 15, I don't know, I'm just making that up. And for per diem, it might be, because they're in arrears. They're turning in their time in arrears. Whoops, I won't say that date. I'm just going to kill this record. But anyway, the point is that it's used. I don't know where it's used for. I know it's used in Pennsylvania. I don't know if it's used in Ohio at all anyway. So I think you would know that because somebody probably would have told you already. So I suspect it's not relevant. Okay, so we just killed payroll setup. Payroll journal templates we did before. That's where that summarized part is. Everything else is pretty much automatic. It's nothing really too exciting. This is where you have the batches. Okay, all the different batches. We talked about all that. Yeah, there's a batch here that you're required to have for estimating payroll. So you have to put that there, and I don't think you're allowed to use it on a normal basis. So I think that's important to have one of those out there. We use it behind the scenes, basically, and then we put the data in there, then we kill it right out. Skip extra withholding, override the calculation order, and we're going to talk about calculation orders a little bit. Force compute, use remainder only. In other words, they have to fix savings and balance checking. They don't want to do that. These are all like for special runs, basically. Yeah, this one and probably the extra withholding. Okay, so that's payroll journal templates. Time journal templates we did quite a bit on. I think we covered that pretty well. Payroll calendars. Did we touch on payroll calendars, Brenda? We went through this, didn't we?
Yeah.
Yeah. Okay, I can't remember. Yeah. Additional pay reasons. So if you are doing additional pay, these are just the reasons that you can put in, and you can put an amount, and that amount you should change once a year. So as you're kind of getting to the end of the year, you would change this to the new amounts. So, you guys pay for a department head, they pay an additional, $3,000. Whoops, you went to it there. $3,000. And then whatever. This is not coaching, because coaching is going to go into a different account string. It's all about additional blocks of salary compensation that computes their normal salary for that standard job they're working on, that default job. And we do have additional pay being used in many, many states. The classes you've probably looked at, it's a pretty big table these days in terms of defaults. And it should be filled in. Right now, I see the leave group code is only filled in on one. Does that mean that's the only leave that we're actually tracking right now? Let me see. Yeah, that doesn't even make sense. Yeah, I can see the leave group accrual. We just have one called sick leave, and this is set to teach, which doesn't exist. So this is data that's, again, could have been fixed in Perkins. I'm on an older version. So it's important to sort of get a code, get a description. The class is a very fundamental filtering and grouping type of field for the system, very fundamental. This is the kind of thing that you typically would have it set to. You want less is more. I mean, you want maybe 10, 12, 15 choices. If you have 400 choices, then this is probably the wrong field. It's probably the payroll job field. You've used it incorrectly. So it really should be down to a list of about this number. This looks good here. Number of employees are showing up. You can drill that, of course. So if I go in here and say, show me my nurses, it'll show me my nurses. Now, again, some of them might be terminated. I can put the status field on there and know that instantly. And again, I'm not looking at blocked. So again, if you want to see blocked, if you're going to show blocked, show blocked. You know what I mean? In other words, put that field, for heaven's sakes, on your screen. Because if you're actually going to show blocked, you might as well want to see blocked, wouldn't you? So, I mean, either way, put blocked on your screen. I mean, that's just basic housekeeping. Why it's not there automatically, don't ask me. And status. I would move status up as well. I mean, I would move some bread and butters here. Let's move the class code field. Where's the class code? Let me hit a C. I think if I hit C, it'll just keep finding it. Is it on the left? Oh, there it is right there, isn't it? Yeah, why class is not on there? I don't know. I never remember why they're not defaulted on and all that good stuff. Social Security, I understand why we don't put that one on. And so they can just copy paste the whole damn thing. All right, there we go. Now I feel more comfortable that these are active nurses, right? Much more comfortable. And actually, I can see if there's any anomalies, too. You know what I mean? Paraprofessional secretary. See if I got my secretaries right. Yep, so I've got an inactive secretary. So it's just I don't know. I like that screen for some reason. Positions is if we're doing position control, the class code appears on the position control system as well, so you would see how many positions. So that'd be a great analysis to say, okay, of the admin, I've got 40 positions, only 34 staffed. Kind of quick glance. Used for substitutes. So typically you would want to click it on these guys. And what they do is that just defaults in. So as I onboard an employee, it checks a checkbox called eligible for substitution. And so then it's easy to run reports. So give me all my active non-blocked employees that are eligible for substitutions. And it's easy to get that list together. I mean, we're not doing any fancy substitute system at this point. We may down the line, but at least we can do that much.
Yeah.
But you got to use it, though. The pay voucher delivery is what do you want the default to be? So as they're being onboarded, you want the default. So sometimes I've seen where like bus drivers default to paper and they got to pick electronic. But nowadays I find most districts are kind of going electronic unless you tell us otherwise. Get on our self-service, call it a day. Email, this is all set to personal, which just simply means that that's going to be the setting, but we need a personal email address, of course. So that's important. I don't know what this field is. Reset. Oh, no, I do know what this is. Reset W-2 delivery to paper. So I guess, I'm not sure why it says reset W-2 delivery to paper. But I think, I guess it really is more like set W-2 delivery to paper. What happens with W-2 delivery is it's set to not selected. and then you can bug them on the ERC every time they log in and click anything. They're kind of bugged until they go to their demographic and switch it and pick something. You're kind of forcing them to pick paper or electronic. I think reset W-2 delivery to paper is just when they're onboarding, we just basically say, we're just going to go ahead and send these people to paper. Let's just be real about it. They're not, like subs. We're not even going to get subs on our self-service. So we need to make sure that we know them as being paper type of W-2 as opposed to electronic. Leave group codes. What is the default leave group code? This is obviously problematic because you just got this one. If I go to advanced on this in detail, I'm not sure I'm buying this. I mean, this may be right. This just simply says no matter when you've started, we're going to go ahead in the first pay period of each month give you 1.25 days. And if you get to the point where you have in your balance, including the amount that we're getting ready to accrue, you're going to get more than 215. We will keep lopping it down. So if you're at 215, then the system will accrue and you won't get a record at all. If you then use, let's say, an hour and you're at 214, then you're going to get an hour. You know what I mean? You're not going to get the full 1.25. You'll never get more than 215. And the proration says do not prorate. So that's not going to prorate. So in the example where somebody is working a 0.8 FTE, they're still going to get the 1.25 as long as that leave group is on their employee card. Obviously, you can stop that by just removing the leave group, and they're not getting benefits or leave benefits. The proration choices might be use hours per day or full-time equivalent. So if you use hours per day, then the system will ask you what is the standard hours per day. So in other words, if on their card they're working 4 hours, this says 8 hours a par day, then they'll get 50% of that number. So that's what that is. Full-time equivalent will just simply be that percent times that. And again, if it's 0, it'll be a 1. If it's a 1, it's a 1. Otherwise, it's a whatever. So that's kind of how we always do that. Block means, block this whole concept. I'm doing something different in a comment. And I don't think there's any hidden columns on this, is there? No, everything you see is what you get. Date to use. The schedule, you do have multiple schedules, and a couple that are interesting. One is anniversary, and the other one is specific. If you do specific, you can actually just dump them a bunch of hours or days on a particular month and day. So you can say specific month is September, specific day is September 1. And so when you process payroll in which the begin date and end date fall outside on both sides of that date, September 1, the system will go ahead and put in a whole amount of days that you say for the whole year. So that's called more of a dumping system as opposed to an accrual system. But we support that fully. That's what specific does. Anniversary is based on their hire date, and that's what the date to use is then used. You have to pick, well, tell me which date to use then to determine whether their anniversary is actually hit. So that's kind of why that's all about. And so on. So it's pretty, minimum months, maximum months. So you can say, if you've worked here 5 years, you get this. After 5 to 10 years, you get that. Supports all that as well. And that's just one leave code. You can have under the same code, sick leave, or let's just call it leave. You can have sick and personal and vacation and others. You can have others down here as well, multiple rows, all falling within that one category, if that makes any sense to you. So a lot of capabilities there. It's more on the HR side, but I'm still kind of channeling it into your brain to get you kind of up to speed on some of that. We can kind of do a whole leave thing later on if you want. Benefits eligible. So we are beginning to use this in our benefit administration system, which we are deploying a pretty good version of that in the 10th release. So the next release, you're going to get a huge amount of benefit administration, open enrollment capabilities. A lot of this is HR. Is this person benefits eligible? What is the date formula? So after hire, this 30 days or 90 days or whatever. And then what is their pay cycles employed and pay cycles paid? We're not using this for anything, but we actually do use this for benefit administration. So right now, this is all benefit stuff for us. So someday we may end up changing these fields, but that's kind of, and they flow right to the employee card. What's that noise? Is that me making that chirping noise? I don't know what that is. Just some feedback. All right, so that's the class table. It's a big table. It's an important table. That's why I spent so much time on it. This, I don't know how much I want to spend on this. This is kind of like, hey, call us if you get into trouble. This is the direct deposit, this main one right here, and I don't know what these last two. I know this last one's Canadian, but this first one here is the standard ACH layout that we use for payroll, not AP, but just payroll. And basically what it allows you to do is to go in and fiddle with possibly, let's say, the second record or whatever. Sometimes they want you to put a 1 in this literal value. The bank, you send it to the bank and they go, oh, that's great, but can you just put a 1 over here? So you're actually able to go here, go to navigate, go to sections. This is actually the sections, considering how you build an ACH file. I'm not sure, Brenda, are you pretty familiar with an ACH file and what they look like?
A little bit.
Yeah, they're just funky. This detail one's where all the pay stuff is. This is the offsetting debit. This is the amount that's going to come out of your employer account for the whole payroll. And then, of course, they have the file header, the batch control, the file control. That's pretty much the design. Typically, if they're fiddling with something, I find they're fiddling with this record here. And so to get to that record, you generally navigate then to lines. And each line is think of it as expressing the data going to the right. So the very first one starts at position 1 and goes 1. And then this starts at position 2 and goes 3. This starts at position 5 and so forth. And they'll tell you explicitly, in line, column, whatever,
Oh.
And so you can fiddle with this, but it's a little bit temperamental. And so it's probably good to do it in conjunction with one of us the first time you do it. It's pretty easy to do. And you can see somebody's put in here. Somebody wanted to actually just write a literal there. Instead of having it be a field, they made it a literal and said Perkins Local School. And what they're doing there is they're just getting the old ACH file and they're opening it up kind of in a text editor and they're trying to mimic it here so that there's less squeaking from the bank. That's what they're trying to do. So probably Dan did that already. So anyway, so it is something you need to be aware of, that the test is this. I mean, my feeling is I don't really do it this way. I would rather go take the software out of the box. But see, the problem is if you use Perkins, if you use this database, let's just pretend you use Perkins for the next company, you got to be careful because you see what he's done here, right? He's hardwired Perkins, and now you're sending Perkins to a completely different bank for a different district. So that's why literals can be real down and not good. So you really got to be careful here and look at at least the first record and the second record here, and kind of see if you see anything that's like literal, like a literal. Literal 1's fine. That means it's a value of a 1. Okay, I can accept that. That's probably not going to be a problem. I'll go to the batch control, see if you did anything in the batch control. Generally, you don't find literals anywhere except in this second record. This is where that's where we get burned. And that's going to burn you if you try to pick up this company and use it as a basis for another company. So I just want to make that. So I'm glad I went over it. But this is connected, by the way, in the bank card. So if you go to the bank card, there's a place where it says direct deposit code, and you'll see that top value there. This one right here, you'll see that in there. And you can copy them. So if you don't feel comfortable, you can copy it to a completely different version and then just update the bank card at the end and switch it back and forth. So you have kind of nice capability there. Employee types. This is the thing that we talked about where we have the different employee types. I've only had standard. That's the one that defaults in. This is saying test the system required entries and test the user required entries. Okay, and then we can go over here and go to, no, not there. Where do we go? I don't think we go here. I think we go somewhere else. Yep, somewhere else. Okay, so we don't do it here, I don't think. Let me just skip to that, which is required fields. Yeah, it's really weird because I've never understood the connection between that employee type. So that employee type, those checks make it then come here. It sees as 5200. This just doesn't make any sense the way this was designed. And then you come here. This is designed from Microsoft originally, so I didn't write this, so don't blame me. I would have written it differently. But anyway, this is the screen I want to show you. So basically, if you sort of look at this and see the record type is master, user defined, and so forth. And this is actually interesting, this one, because, and I now understand why union code was set to none, because that one was a little bit of a new one to me. And so what Dan is doing is he's forcing the union code to at least get a none because he happens to know that he's also added it himself as a required field. See where it says user required union code field 22? So he did that with the idea that he wants to make sure that every employee has a union code. The ones that we added, I know, is the class code we wanted to make sure is there. We had the employee location and default payroll jobs. I'm just not sure. Yeah, I'm just not sure why one's clicked versus the other, but anyway, it doesn't matter. It's fine. I mean, the thing is that the employee type, remember, had both checkboxes checked, so it really doesn't matter. As long as it's checked on one of these, you're fine. But these are the fields it's checking for. The employee number has to be filled in, which, of course, I'm not sure how you could do it otherwise. Last name has to be there. The state has to be there. The birth date, social number, U.S., union code, employee date, class code, employer number, pay cycle code, default reporting authority, social insurance if it's Canada, employee type, ironically, employee location code, which is the K-12 field, and default payroll job, which is a payroll field. Bill, do you need me? There's some IM going on, but I'm assuming it's not for me.
Oh.
They're probably talking to each other. I'm not sure who's on this call, actually. Let me just catch up who's on this call. We have Chris and James as well. Hello, guys. And Linda. Hey, Linda. How you doing? Very good. So, all right. So we are on employee types. Filing statuses will be an important part of payroll control design. So we'll go ahead and just look at them. They're kind of hard to look on their own because they are absolutely in no particular order. And so you pretty much, when you're going to create a filing status, you kind of create them almost as independent little guys, and then we eventually will connect them to the reporting authority. So medical has EE and employee plus child and family and so forth, and then other ones will have other options, and so it's kind of like weird looking at this list, but this is just literally the code and the description. That's all this is. It doesn't do anything. Now, I can't delete one, though, that is being used anywhere. So if it's actually being used under a reporting authority, I won't be able to delete it. You kind of have to back things out of having them being used. The system's very good at protecting errant people just trying to blow things out without real good reason. So, I mean, as an example, I'm just guessing that this one's probably valid, but maybe not. But if I delete it, it deleted it. Let me see. Let me delete another one. Like, I have a feeling these I don't think are being used for anything, I suspect. Yeah, nope, there we go. So there you go. So it says vacation status does tax reporting vacation, which, by the way, doesn't necessarily mean that vacation is being used anywhere. It's just the computer doesn't know that at this point. It just simply knows that that filing status is a child record to reporting authority vacation. You can't delete it. So, that's fine. I won't. Okay. GTL setup, I think I might have showed this to you. These are the factors that the IRS have used for thousands of years when computing that over $50,000 to try to determine how much money needs to be, assessed to the employee for tax purposes. So it's just don't mess with that data. Have we been through these before? I feel like we did go through some of these.
Yeah, some of those, yeah.
Yeah. Although now they might make more sense to you a little
right.
bit. That's why I think it's better to do it. Yeah, localities I think we went through. Localities would be something like your counties, and then your counties. What county is Perkins in? Do you know?
Nope.
What county is Trek in?
Marion.
So we go Marion. We can go school districts. And the only one that's in there right now, there's got to be more school districts than that, isn't there? But maybe not. And so in here, we actually really have municipalities. And municipality shows us that rate that we're trying to get to. So we just trick the system and force it so that if the municipality code has the same school district code, we kind of just pull it automatically. So in essence, as we validate in this school district code, we validate in the same code. We just go see if the same code exists, and if it does, we just populate it, and that's what brings us 0.75. Because in Pennsylvania, it's 3 levels, as I mentioned earlier. It's 2 levels in Ohio. So we just kind of trick the system to use the same piece of software. So that's basically how that works. Longevity rates is kind of all about if you have longevity built around years of service, so you get a certain percent of your standard salary based on years of service. We got that covered. We can handle that. So we have a whole system for that. Payroll control category codes is important. It kind of just basically describes different kinds of payroll controls and puts them into different groups. and we'll see where those are entered and see the important point of that. I do know that this one is important here. This one, payroll job not required, can be important as well. But there's other ways to handle that. So again, there's two ways to sort of handle whether a payroll job is required or not. Generally speaking, the only kind of earnings where we don't require the payroll job is when it's fringe earnings, vehicle, stuff like that. But generally speaking, every single other kind of earnings we want to be associated to a job for analytic purposes. So generally speaking, this is the fringe. This checkbox helps us because on the payroll test report, we give you a grand total with fringe and then without fringe. And we know which earnings are fringe or not fringe by that checkbox. So if you're getting on your test report total earnings of $300,000 without fringe and with fringe $300,000, totally the same dollars, and you know you have fringe, it's probably because either the payroll control for the fringe earnings doesn't have this fringe code as its payroll control category, or it has it, but this checkbox is not checked. So just get that setup done, rerun your test report, you'll be good to go. So that's a support issue that we do see from time to time. Pay cycles, have we created pay cycles? I can't remember. So in pay cycles, there's a couple things to note. One is the pay frequency. This is preset, so you set up a code and description, and then you pick from these choices. So generally speaking, it seems like this is semi-monthly, and we're just using one, which is great. A lot of times we'll pick bi-weekly, sometimes monthly. We have in North Carolina a lot of monthly employers, which is not my favorite. I don't think it's the employees' favorites either, quite honestly. The payment delay is, so when we're calculating the pay periods, do you want us to add days from the period end date to get to the check date? Semi-monthly, for the most part, we're paying 1 through 15 on the 15th and 16 through the end of the month on the end of the month. That's generally the typical construction that the system is going to do. The payment delay is really not that important. It's typically on a bi-week. We're kind of in a flavor where, the check is being cut the Friday of the previous Friday that ended. So that's 7 days, or it's 4 days or whatever. So whatever your cutoff is from the period end date to your check date, that default is put in there, and that takes care of that as it creates it. You still can edit it, but basically takes care of it as it creates it. The annualizing factor, default periods, or generalizing generated periods. This is important, and I'll just sort of say this to the whole group that's listening to this. This is important if you really are wanting to build a pay cycle that really is kind of in the other category, if you will. If you're really, for the most part, and I guess I gave a perfect example, is biweekly, in which we have that rare year in which there's 27 periods, as you've probably, Brenda, in your experience, probably have come across that. So in that example, when we're doing divisor math from this pay cycle for that year, do you want to divide their annual salary by 26 or 27? So if you were to pick default periods, it'll be 26, and if you pick generated periods, it'll be 27. So that kind of is really how to think about it, because we do a lot of divisor math all over our system from the pay cycle, and we can override that from other places in the system. But if it's not set to override, it's set to use the pay cycle as a divisor, the question is, do you want the system to get the default periods? Default periods for the pay frequency is what that means. So obviously if it's monthly, it's 12. If it's semi-monthly, it's 24. And if it's biweekly, it's 26. So that's just kind of a little nuance there. I normally think generated periods probably better. In a semi-monthly environment, it probably doesn't matter much one way or the other. But in North Carolina, that's a whole other story. Okay, so the terms are down here. So the next level down is terms. And the terms code you make up, you can see they're just using a, code hyphen code, which is fine. That just simply means for the fiscal year ended on 6/30/13, 14, 15, 16. To go into any one of those, if I click here and hit navigate and go to the pay cycle periods, I will see them. And so we'll see that this first one starts on 7/1/15, and 7/1 to 7/15, paid out on 7/15, 7/16 to 7/31. Now you notice the system was smart enough to do this automatically. So it knows 8/15 is a Saturday, as we all know, and so what it did is it picked 8/14. So you'll see occasionally it doing that. There's the 30th, it's doing it in October, and so forth and so So that's basically that. To create a new one, I always go to the last one and say, okay, my next one is 7/1/16, which is kind of obvious. So what you would do is you go 16-17. Might as well keep the flow going. Default periods. It's telling you right there what default periods are. So we have an action there. You can't just enter them. You have to generate them. And so what you do is you go to action, you generate your pay periods, and it opens up a screen in which it kind of knows what you're allowed to pick. So you can't really pick this value. It knows what to do. So even though it's hard to tell the way it's bleeding through here, the only thing you can actually pick is this right here, 07/01/16. Sorry, 16. I'll hit OK. You'll come back and say, yeah, did it. Navigate. Picks up that one, and probably, let's see, yeah, you can see it picked off 2 days. So it's constantly going to the, the next week, the previous backwards week day. Now here, if you say, you know what, for special considerations, we're going to do it on the 28th, you just come in here, do the 28th, and you're good to go. You cannot at this time edit these columns, and we've been asked to allow them to be edited, and quite honestly, I think we're going to end up allowing that. It's a long story, but North Carolina is very particular about their start date and end dates. I don't find it all that useful, but they find it very important. So we're going to have to probably make some accommodation to make this editable. But then if we do that, I think we're going to make it so you can't close this screen unless there's no overlap. You can't, because the catastrophe is if you let them do it, they'll create an overlap where, this 10/1, let's say this was 9/28. Well, what do you mean? I mean, how can I have a period that starts before the last one ended, right? So if they were to change this early, there's no overlap. There's gaps, but no overlap. And the other question is, should I allow gaps? That's the question. Should we allow gaps from the begin date to the end date, the end date? Should we allow gaps and overlaps? And I would argue probably not either. I don't understand why we have gaps or overlaps. So that's kind of, if they can live within that rule, I think we're willing to make the change programmatically. Right now, you can't touch those fields. So I've just set up a whole other year. Who cares, right? Pay distribution transits are just those banks. We talked about that last time for direct deposits. Kind of the lookup and validates the ABA numbers valid. Pay schedules. So you guys don't use pay schedules, and of course I understand why Trecca doesn't use pay schedules, but I'm still sort of surprised that we're not using pay schedules for anywhere else in Ohio, because you are kind of, I would imagine, union-based, and aren't you, from just a marketing perspective, using, I don't know if they have negotiated pay schedules, so I'm just a little confused as to when I went into Perkins why it was completely empty, it looked like. Well, I just had this one here. So again, the way they work is you first you would set up payroll grades, and let's just use those as our 3 categories. That's fine. I'll accept those. And I don't think there's anything exciting there now. So we'll go to payroll schedules again, and we'll call it, this is a pay type. I'm going to go teach Sal, whatever. Just make up a date. Teacher salaries. I can't type. Too tired. Okay. Hourly type. Be salary. Okay. Come in here, details. Of course, you have to enter this one time. You can bring this in through a package. We can import this data, or you can import this data. So bachelor, step 1, makes, I don't know, 35,000. Let's give you an idea how it works. 2 would be 36,000. There's only you're stuck if you're a bachelor. You only go to 3 different steps. You can top out at 40,000, otherwise you're screwed, right? That's basically bottom line. So that's kind of basically all you're putting in. And then if I go and back to this one, details, I can just continue. I can pick another one, masters 1, masters 2. And master, I'm doing a very simple sketch, just to give you some. So these guys will get paid 45,000 because they're the masters. That didn't look right. I knew that was wrong. And our last one is, I just want to show you what happens if I convert this data. So, whoops, I'm pressing all kinds of buttons that aren't working for me. Okay, and this is MA with 15 hours of credit, right? So they're going to go ahead and start at, I guess, 50,000. 55. You get the idea. God darn it. Okay. So my simple little guy is created. Yay. So what you do when you roll the jobs, because again, we're going to get into rolling the jobs, probably not today, but next time. I can't believe how long this is going, right, Brenda? But again, when we roll the jobs, one of the main things that the system does is it automatically will go out and say that, for the same grade and step, or this grade and one step higher, or even 2 steps higher. The reason we see that occasionally is that they freeze, they don't move steps for 3 years, and then they agree on one particular year to go up 2 steps. So that we do see, and we've completely accommodated that. And so anyway, but the point is that the grid's not the same. Every year the bargaining changes and the grid is different. So that's the other side of the coin. So what you need to do is create your new grid. And when you're in the budget mode, usually the bargaining's not complete, and you really don't know necessarily what that grid's going to look like. You just got to guess. That's part of the art of it, more art than science. So, but I'm going to go ahead and create one. I'm going to go ahead and just copy. And I'm going to say effective, this would be like 07/01/15. We're not doing a no change. We're going to go ahead and do a percent increase by 2.3%. We're going to go ahead and round to the even dollar, and we're just going to the nearest is 5, flat amount, fine. Okay, boom, it's done it. So then we come in here and we go details, and all those numbers have been changed. Okay, you believe my numbers are right. Hopefully you do. I have no idea if they are. But the point is that they are. And you can have multiples. You can create another one for 7.2, another one for 7.3, another one for 7.4, all with different scenarios. Then when we do the budgeting, there's a place in the system where you'll kind of tell it, well, I want to do this sheet using this as an effective date. Oh, no, this one with this as an effective date. And the system will just see them progressively so that you can actually see that maybe with 3 different scenarios or 5 different scenarios. So this could become very powerful from a modeling perspective when we get into the budgeting side, but also when you really do move the jobs and actually really set these people up for next year, the system can deal with the compensational components of how that shifts over and get 90-10, get 90% of it guessed on its own based on the rules of the district. This is where you put those rules in. So a real important part of the system. It's highly usable, and of course we're always open to improving that area, but it's been used by a lot of districts over the years, so I do know it generally functions, knock on wood. Payroll activity codes we talked about before, that kind of really is just something that emanates at the payroll job level, flows to the employee job, flows to the ledger. So it's a way, it's just think of it as another thing that you can use to put an attribution, if you will, on at a job level and have it flow all the way to the ledger. And again, we have these codes coming up, but nobody on this call has ever told us what they are. In other words, I don't know if these codes have anything to do with Ohio, or if this was just dragged around from a North Carolina database or a Pennsylvania database. Anybody know on this call? Or, I see it's misspelled. I'm missing a T right there. Anyway, so since there's nobody answering, I'm assuming I still don't know. Anyway, so we'll just ignore that for now. Dan may be a better person. The grades we looked at. The payroll jobs, Brenda, we spent quite a bit of time on this screen, didn't we? We went through this whole screen, I believe, unless I'm absolutely on drugs. Didn't I go through this whole screen with you? Does this not seem familiar to you? Brenda, you there?
Yes, I am.
Did we do payroll jobs?
Yes.
I think we did too.
Yes,
by the way,
we did.
Here's where the payroll schedule is, by the way.
Okay.
And people say, well, where's the grade go? And I'm going, how can I put the grade? The grade is based on the person. So that just sits on their employee job. You have to put it in one time as a BA, an MA, whatever, and then that just rolls every year. And the only time you change it is, well, when they actually achieve those different credentials, right? I mean, so
right.
the grade makes no sense to put it here. This is not employee specific. This is job specific. But we do know that we're using this payroll schedule for this job and this schedule for that job, this calendar, this whatever. So this is kind of what that's for. Paycheck description, all that good stuff. Okay, payroll locations is a pretty big table too. You do have some nuances in Ohio. where you need to fill in every time. And I'm not sure why these dashes are in here, but I'm sure you guys know. Again, I have a nice display of employees, so if I want to see all the people in the Briar Middle School, there they are. They should be all my Briar Middle School people. I can search it by title quickly and kind of get a good synopsis of that school. But my point, though, is that in terms of the fields that you need to think about for you guys, it's the building IRN. Okay, we need that. And then we have to figure out this transportation lunchroom percentage and square feet. And that data you probably already have off the data you've been already submitting to EMIS for all these years. So it just needs to go in there. And you guys, being TRECA, should be experts in this area because you guys are all knowing this stuff. So that's stuff that needs to make sure we get filled in every time you put up this table for each entity that you're onboarding. Okay, so it's really a code description. This will be automatic. Fill in those fields. Ready, set, hike. I think you're good. Payroll salary update names are like batches, and so that's really part of just putting in the batches, if you will. And there are some particulars here, some override calculations, some new enhancements we've done, and I will talk about that when I do the salary update worksheet, because it's kind of easier at that point to go through this and make it more sense. But this is kind of like batches, basically. And the reason you do that is because as you're doing budgeting and so forecasting and you're rolling the jobs, again, we only want one person to be in one batch at a time, and you might split it up and say, okay, I'll do all the teachers, you go ahead and do all the administrative people, you do all the bus drivers, you do all the cafeteria workers, and you might create, 10 different sheets and so forth. And so it's just nice separation to be able to do all the coaching in one place, because this stuff gets analyzed pretty heavily. It's very important, obviously, part of what they do. Reporting authorities. So reporting authorities is a crucial table. It's connected to our payroll controls, very, very vital. That's where the filing statuses are a child record of, and that's also where we indicate whether we're going summary or detailed to the AP. So you put a code in. You have 3 choices here, 4 choices: federal, state, local, or other. Okay. Local is, again, for that city tax that we're doing. A state is the state of Ohio, obviously, and state unemployment as well. Federal would be, obviously, let's just kind of filter for federal. Let me just kind of just show this. I'll just go find a federal. See how many federals we have here. Okay, so federal is being used for that, and Medicare, I'm not sure what Social Security is doing, so that's just kind of confusing a little bit to me, but I don't know. Do we have one for Social Security? No, we don't. So, again, I'm not really sure which one's for Social Security, but anyway, and so all of them are important. Normally the ones you'll be putting in will be other ones. Other ones are anything that's not those, not federal, state, and local. So anybody that's doing a normal type deduction, whether it's retirement, whether it's medical, healthcare related, life insurance related, vision, dental, dues, garnishments, child support, you name it, those reporting authorities will always be other. And it's important that you pick the right one. Do not make a mistake and do not pick blank. Make sure you pick one every time you put a new reporting authority in. The parent reporting authority, I know there's a report that can actually work with that. And so if you have, let's say, 5 different reporting authorities, you can have like a parent version. I think this looks back up in the same table. No, maybe it doesn't. I don't know what it does. It's not doing look up to anything. Let me see if I can type in anything. Must be other. No, so it's just lookup's not working, but it has to be other. So I guess what I could do is I could type this one in here, and that is other. Yeah, I'm not sure then. It's not really doing much of anything. I'll ignore that field. I've never used the field before, so
Andrew?
that's kind of field. Yes, sir.
I've seen that on state and federal sometimes when I was looking at some stuff on Worcester.
Yeah, so
Yeah,
there you go. Yeah, so it does have some level of parent reporting authority. And I don't know if maybe it's related to the back media, I'm guessing. Not really sure. So that's probably the only one, it looks like. So there you go. The name is the name. Thank you, Bill, on that. The AP posting option is something very important. It defaults to summary. That's what you want normally. You only want detail if it's generally a wage type of, like a garnishment, child support, something tax lien. Those are the kind of things that you want to have detail. Otherwise, if you accidentally put like the medical detailed, you will get so many invoices over on the AP side. That happened recently where somebody just didn't realize it, and they created, I think, 1,200 AP invoices. And people are a little irritable about that, which I can understand. So be careful here. Don't pick detail unless you know it's pretty much a few people on that. You don't want to do it for something large scale. That'll be definitely not a pretty picture. This plan start month is important. It's for your health care providers. It'll become more and more important as we roll in more and more benefit administration functionality. This basically is to say, if this is the health provider, when do you guys renew those health plans? They always roll at a certain time, September, July, whatever. Pick that month that it rolls. So if it's September, put September in there, and later on we'll take more advantage of that. Right now we do it in our medical worksheet over the other auth screen, but there's more and more places where we're going to be working with that because we can't figure out how the employee is doing relative to the plan year because we don't know the plan year unless you tell us. So that's how we know that the plan year is X to Y basically. Default proration cycles probably, right? Yeah. So this is real important as well possibly. So what happens here is I have employees. They're paid sort of all year round. Maybe they're paid lump sum, maybe they're paid in a lump sum payout in June. But whatever, I want to take their annual amount of contribution, let's say it's medical, and I want to actually get from them, in 20 pays as opposed to 24. So if, let's just pretend this was a medical one, this is not, but let's just pretend it was. If I put a 20 in there, what the system will do is that when you put their data, their filing status on their other auth screen, you'll see this other field fill in, which is the proration cycles of a 20. And then the system will automatically divide that annual amount. It has to be an annual amount by 20. And so that will take it from their paycheck over 20 pays instead of 24 pays. And people like to do that because they just want to pay in and get it done. They do a lot with union dues and different things. So we've had a lot of use of that, but, it just depends. Uh-oh. What am I trying to do? This going, yeah. Whoops. Can I put a 0 in there? Yeah, okay. Sorry, I didn't know what I was doing. Locality is the code that appears in box 20. It doesn't really apply to EIT, so it's really not used very often. I don't see it being used, although I would think that possibly it would have been filled in here. Again, I'm looking at an old version of Perkins, but if you put a code, Amherst is MH, something like that, then that should appear in box 20 on their W-2. So as long as City of Amherst has been tracked from payroll control and be mapped to box 1819, then this should show up in box 20. So that's what the locality is used for. So not exactly sure what happened this year with the W-2s, but that's a separate issue. Payroll rate code, I'm trying to think about what that's used for. I have to say I'm a little bit perplexed about what those fields are for. I don't know if we added them, and even the balance control. Let me see, we have any data filled in with any of that? No. Payroll rate code and balance control. That's very, very interesting. I just can't tell you guys where that is used. So I am going to not say. I'll have to take a look at that, but it must be, I think I do know. No, I do know. Yeah, it relates to our worksheet. It relates to the work that we did. So we have this very fancy worksheet that can run through, and you can go through the process and say, well, the person had a baby or is wanting to switch from family to parent plus children as of this date. And what happens is if they are finished the year, meaning that by the time we find out the year has already passed, we're in the new year, and that's fine, and we can deal with that one. But we're not doing any more withholding. We can't fix it because the year is over, in essence, and they owe us money. How are they going to pay that back? So then the system will then look for the payroll rate code to be here, just a flat amount, because you negotiate with the employee. Well, you owe me still $800 or whatever, and they say, well, can I pay it, $60 over X amount of cycles? So when you say $60, then it knows which payroll rate code here, and the original $800, which is kind of like a loan, it pushes the entry into that bow control, so it just keeps taking it, and then when it finally finishes $800, it's paid off. So again, these are two fields, and they are used for an overage or an underage, should I say, an underage. They didn't pay enough into the system, and you found out about the family status change after the plan year ended. So I know it's a very nuanced case, but we do have that. Central Bucks School District in PA uses that all the time because, unfortunately, they find out about the information after the plan year is already finished. So we're pretty sophisticated in how to handle that, and these two fields help us to do that. Whoa, that was a lot. So navigate. Okay, so we got a couple things here to look at. We have statistics. So let's hit statistics, and let's see what that's showing us. Okay, prior year, because all my data is in the prior year at this point. So if I switch my workday to 12/31/14, okay, go back to my payroll reporting authorities. Right here. Let's take City of Amherst as an example. Statistics. Okay, so the system is doing quarter date, year to date at that point. Income tax withheld, year to date, prior year, and so forth. I don't know if these are drillable or not. No, I don't think I can drill any of this stuff, which is kind of a bummer. It'd be cool if I could drill that stuff. So I don't know, but you can get to the ledger entries. So if I do that, it's going to bring me up all the ledger entries for this reporting authority. Okay, and then I can set filters, do all kinds of gyrations, and so forth. So that's one thing you also can do straight from the reporting authority. And you have the filing statuses. And this is not a good example, but let me find a good example. Let's find your medical. That would be probably a good one. Okay, so as I told you before, the medical filing statuses are independent table. You just put them in loosely. Here's where I'm finally saying that these are actually the filing statuses that relate to this reporting authority. So when I go to an other auth screen and put in the record, I put in the other authority in medical, then when I do the lookup to the filing status table, it is completely the same lookup you're looking at right here. And then you pick it. The ERC order, I don't think we're respecting at this time, so that's interesting. We might have to look at that later on. That's from an older version of our software. The design there was during open enrollment producing a certain order, but we do it so differently now. I'm just not sure that's relevant. Actually, I'd say I'm wrong about that. It is relevant. It's relevant on federal withholding. So I'm lying to you. So if I go to federal withholding, yeah. So just so you know, it is relevant, and I lied to you. It is important. So it is used in the state and federal withholding to determine what shows on the self-service system. And as soon as you start filling in some values here, the system will now show us only these last three. I don't think you'll end up seeing these other ones even showing up. And what you're going to see, by the way, on the self-service system is you're going to see the description. You're not going to see the code. So again, be careful on what you type, because what you type over there on the right is what they're going to see on the self-service system. And you're going to see it in that order. So we're going single first, married, then head of household, trying to make it simple for them. So all that is designed that way. I was thinking about the benefit enrollment, which is done differently, but this is used for federal state withholding filing statuses. So I was wrong about that. Required fields we went through already. Retirement categories. The retirement categories table is a table you in theory could edit. Based on what my understanding is, and again, I'm not an expert in this area. We have other experts that are smarter than me on this. You don't want to muck with this. There's hard coding and hard wiring inside the way that the retirement system works in Ohio and in Pennsylvania and New York and other places, where this table is the same for everybody in that state, and the programming is geared towards that. So I think it's important to sort of leave it the way it is. Upon an update, possibly it could be edited, and if it is, it'll be part of the automatic push of the new code. There'll be a SQL script behind it that will fix this data up. So my sense is you never want to edit this. I think in theory you could, and that's only for support reasons, but you really don't want to be mucking with this, and that's kind of my own understanding of how this all works. And exactly how it works right now and the intricacies of it, I am not going to get into, but we can, as we said before, can schedule a separate conversation about that at some later date. Retirement system positions, I don't know if that's in use. That's used, I know, in Texas. Not sure if that's used in Ohio. Tax form and tax types. So let's go to tax forms. All right. So we're going to see this data showing up on the payroll controls. So as we learn more about payroll controls, we're going to see that it's connected to this information. So the system needs to know, tell me information for different boxes for the 940, which is the annual FUTA return, the 941, which is the quarterly federal return, and the W-2. Those are the three main federal forms that we support. So in each one of these, I'll just take the W-2 as an example, we have a navigate, which is classes. And this basically translates, if you will, two boxes on the W-2. They really are. And these, again, it's kind of similar in a sense. These are temperamental because these are literals. The system is literally looking for 12EE and 12F and 12G and so forth. That's pretty much what it's looking for. So at this point, this gives the information so that we finally do understand how to get to wages and tips, or let's just take whatever example we want. I guess more example would be something like this. Dependent health, emergency, other. This is PSERS, which I'm not sure why that's there for Ohio. You see Ohio showing up there. So these codes are just simply here. The system has a reporting authority. It knows whether it's using the payroll amount or the taxable amount, because wages are the taxable amount. The actual income tax is the payroll amount. The sign is reversed because the payroll amount stored as a negative, the tax amount stored as a positive. So that's why you're reversing the sign. So it all comes out positive, if you will. So if it comes out negative, you're going, oh, something's not right. Well, just come here and you'll probably see that somebody didn't make this reversed. All the stuff should be managed and maintained by our support department, but again, you guys are all your own support department, so you need to work collaboratively each year, particularly at tax season, in terms of any changes that might need to be made based on all the testing we're doing and so forth. So I'm not explaining 100% of this, but I am telling you this is important stuff, and be careful with it. Why this one is here and is blank, I don't know. Quite honestly, it's been that way for a while. I don't know what AA and BB are. Sometimes I feel like the blanks may be the ones that we can just delete, but I just don't know. It's kind of tough to know. If you delete it and all of a sudden it's running through the report and it needs it, it's going to error out. It's going to say 12.AA not found, 12.BB not found. So that's that. The 941 will look differently to you. Ledger. By the way, you can do ledger entries on these things, which is kind of crazy. Okay, and we've had some problems with this one as well. I know the 941 was broken down because there was some excess data that wasn't correct here, and we just, I know, fixed that last year and got the 941 totally working properly. So anyway, it's an area that we definitely have to stay on top of. Tax types, I think, is just these three. I don't think there's anything else that you see here. Yeah, that's just this. There's nothing there exciting. Okay, Brenda, you wanted to do a stop today at 3:30. We're at 3:25. So respecting your wishes, my feeling is that we've kind of come to a perfect cutoff. And then what we now start working on is all of these, and this is all connected to payroll controls. In other words, payroll controls, rates, brackets, base amounts, method, step classes, methods, all that stuff is now the full-blown, everything I've been dancing around, basically. The only thing that we still want to deal with is, again, a retro pay and enrolling the jobs and doing the budgeting of the jobs and all that kind of stuff. So we still got a decent amount of content. We are finished, I think, for the week. Do you have your calendar open?
Yes, I do.
I figured you might. Okay, I'm trying to get to my Outlook. There we go. That would help. All right, so next week is good for me, except for Wednesday. Jeremy's got me going to Buffalo. I'm sure that'll be fun with all the weather.
Yeah.
Yeah, I mean, it's up to you. I mean, I could do like we did, like a Monday, Tuesday, if you like. We could do a Monday,
Yep.
Friday, if you like. I mean, what is your preference at this point?
Probably Monday, Wednesday,
I
or
can't
whatever
do-
day.
I can't do Wednesday.
Okay.
Yeah.
Monday,
I-
Tuesday.
Yeah, you want to do Monday, Tuesday? All
Yep.
right. So I'll put out again. We'll paint those 4 hours over, and it'll take us at least that much. I don't know what sessions we're on now. What are we on? I got to keep counting now. What are we doing today? We're doing 4. Is that right?
I thought we were on
No.
six.
No. We're on 6.
Yeah.
Six.
Okay. So I got to keep it rolling. So I'll say 7 and 8. And 7 will be a good one for anybody that's on this call. If they want to learn how to construct payroll controls, this will be an important session. And so I'll update it. I'll put that content on there as well so people see that. And with that, I bid you adieu.
Okay.
You take good care of yourself, and we'll
All
talk
right.
Monday. Call me
Okay.
or email me if something else comes up.
Okay. Thank you.
Otherwise, we'll talk later. All right, guys.
Okay.
Thank you.
Thank you.